All right, so now we're going to talk about financial activity and budgetary accounts. These are the accounts that are going to appear for us, and these are new accounts that you're probably not going to be familiar with at this point. So this slide right here is going to be another good reference for you, another table for you to look at and have a list of these accounts. So on the left here, you'll see the budgetary accounts. Now these are the new accounts that you're not familiar with, right? We've got estimated revenue, appropriations, estimated other financing sources and uses. So that's other financing coming in, other financing going out. We also have a new account called encumbrances that is very specific to governmental accounting, and we'll talk about that later. Same thing with this budgetary fund balance reserve for encumbrances. It's kind of a complementary account almost for that encumbrances account. Now on the right-hand side, you're going to see the financial activity accounts. Now you'll sometimes see them called financial accounts or activity accounts or financial activity accounts. They'll be called any one of those names, so just know those are kind of interchangeable. These are the ones that you are probably more familiar with, right? They look more similar to what we would see in a for-profit organization. So you got revenues. Now, obviously, tax revenues is not something you're going to have in a for-profit organization. You've got expenditures, and then your other financing sources in and out. Okay, so you got transfers in, proceeds from debt, and transfers out. So let's talk a little bit about each one of those new types of accounts that we've got there. So the other financing sources, these are going to include transfers in and from other funds and the proceeds of long-term borrowing. Notice that is other financing sources. That is a source of revenue for us, right? Notice also this is the proceeds of long-term borrowing. So if we issue bonds from our governmental entity, the proceeds from those bonds are going to be considered an other financing source. Okay. Revenues are defined as all other inflows. They include things like taxes, charges for services, amounts provided by other entities such as the state or federal government. A revenue is a revenue. They just simply somewhat different here in governmental entities. We just get some of them from different sources. Also recall that since we're using this modified accrual basis of accounting because of these taxes. So expenditures, they're expenses, right? We just call them expenditures in these governmental category type funds, right? So they're recognized anytime a liability is incurred, and it'll be settled with our current financial resources in the fund. That is why we call them expenditures, not expenses. So expenses can be long-term, things that are going to be paid off with long-term resources. However, an expenditure, when we think about it in terms of these governmental category type funds, expenditures are going to be paid off with current resources. So those current financial resources, we're inside the fund type that is using the modified accrual accounting, which uses the current resources focus. So it makes sense that expenditures are paid with current resources. So current salaries, land or buildings, payment of interest on principal or debt for debt services, things like that. Transfers out of a fund to other funds, we classify those as other financing uses. So the big thing that we're going to talk about right now is budgetary accounting. So budgets are, as we've discussed a couple of times, budgets are legally binding in a governmental entity, right? Once they set a budget, they have to stick to it. It's legally binding for them to stick to it. And as such, the GASB requires them to present comparative statements. So they want to be able to see what did you budget and what did you actually spend. Sometimes you'll hear that called budget versus actual. You'll hear it called a variance. But that's all it is. It's really just a comparison of what did you budget and what did you spend. The GASB doesn't tell them how to budget, and it doesn't require them to maintain budgetary accounts. But as you'll see as we walk through these statements, you'll see that it's going to be much easier to create those comparative statements if you do maintain the budgetary accounts in your accounting system. So one thing to be aware of, these budgetary accounts do not actually appear on your general purpose financial statements, so don't go looking for them. If you are trying to complete one in a homework or a test or something like that, just know that they're not going to show up there. Like, we close those out, they're gone, right? We'll walk through that process. Governments do typically record these in their accounting system just to help them assure that they're compliant, right? It's a compliance insurance thing. I know that when we audited at the state government, it was much easier for us to go back and look and make sure that they were being compliant with their budget and any state statutes or federal statutes that they needed to be compliant with if they had taken their budget into account in their system, in their software. It just gives them the ability to evaluate how much is budgeted for a certain area and how much we've spent in that area, right? That's why you account for these. If you say we've got $1,000 for ink pens this fiscal year or whatever, this accounting period, and you spend $800 of that, then you've got a $200 favorable variance or a surplus. You didn't spend all of your budgetary funds for ink pens that accounting period. But let's say you budgeted $500 and you spent that same $800. Well, now you've got an unfavorable variance. You've blown your budget, basically. And recording these is a way that we can track that easily. Again, this last point here is, once they adopt a budget, once they record the budget, it is legally binding. Now, they can go back and change it. They can amend the budget, but it is very difficult to do so. It typically takes votes from the Board of Aldermen or whoever the governing board is for the governmental entity, as well as approval from those charged with governments. And it's typically raises a lot of questions if you're having to go back and revise budgets constantly. So, finally, really quickly, and make sure that you take good notes on this. These are all these new nominal or temporary budgetary accounts that we've got, right? Recall, again, not that I don't think that you guys know this, but recall that a nominal account is an account that we close right at the end of all the accounting periods. If you think back to your for-profit, and probably the last time you really did very many closing entries was 201 or 301, right? But if you think back to those, they were they are your revenue accounts, your expense accounts, as well as any dividend account. We probably won't have any dividend accounts to deal with here. We're mostly going to be dealing with revenues, expenditures, and then this new type down here called encumbrances. So what I want to do is go through this and just give you the normal balance that these hold. Again, a normal balance is how does this account increase? Does it increase with debit or does it increase with a credit? If it increases with a debit, then that means it is a debit normal account or a normal balance account held with a debit. So this first one, estimated revenues. Now, a lot of these are going to be backwards from what you're used to doing. So take your time, read through these, really understand, refer back to your textbook, back to your notes. Ask me if you have questions. Because a lot of these are going to be backwards from what you think. So estimated revenues. These are what you estimate you're going to collect on taxes, service charges. So you've got property taxes and you estimate in your budget every year you're going to collect $5 million in property taxes. That is an estimated amount. That is not an exact amount, right? So these get debited. Appropriations receive a credit. Appropriations are basically the funds that the government allocates for a specific purpose. So we appropriate, as Missouri State, we may appropriate portions of the state's budget to use as our own. I know within smaller governmental entities like a county or a city, particularly with counties, they may have appropriations for like the municipal court, things like that. But they are funds that are legally allocated and authorized for use for that specific department or a specific project. The next one is going to be estimated other financing sources. These are monies that are coming in for us, right? We're estimating other financing sources coming in. They're inflows of cash for us, inflows of revenue for us. So this is typically going to be from any long-term notes you have or any bonds that you issue. And these hold a normal debit balance. The next is estimated other financing uses. Again, these are going to be outflows of funds, typically transfers to other funds, and these will hold a credit normal balance. The next one is encumbrances, and this one's one we'll get into more later. We'll talk about it in more detail later. It's a little bit confusing. I think it's probably one of the more confusing journal entries we make in this class, but if you understand what an encumbrance is doing, it makes it easier to make that journal entry. So what an encumbrance is doing in the end is you're basically, the way I think about it is you're putting a paperweight on a stack of cash, right? So you take a certain amount of money. You say we're going to spend. We've placed an order for a new police vehicle, and it cost us $65,000. We're not going to encumber that $65,000. You're basically recognizing an expense before the expense is actually incurred, right? So you're going to put a paperweight on that money, that $65,000, and encumber it. So you're going to encumber it, and you're going to say, we're not touching it. We're only using it for this purpose. This is only being used to pay for the purchase of that police vehicle. Okay, so you encumber that money as soon as you incur the expense, or excuse me, not as soon as you incur the expense, but as soon as you make the purchase, as soon as you make that purchase order. So as soon as you order it, or as soon as you sign a contract for something, you encumber that money. Okay, and it just basically, just think about it like a paperweight. That there's a paperweight sitting on that stack of money, and you have encumbered it. Okay, that gets a debit. That holds a debit normal balance. Okay, in the next one, this last account type we have here is a budgetary fund balance reserved for encumbrance. Like I said, this is kind of a complementary account. It helps us to decide how much of that encumbrance we've actually spent. Are we spending it on the right thing? And it just kind of breaks it out. We'll have an encumbrance, a reserve for encumbrance for certain accounts. So we'll have reserve for encumbrance for police vehicles, reserve for encumbrance for new lighting systems, reserve for encumbrance for whatever the case may be. And those have a normal credit balance. So like I said, put this down in your notes. Make sure that you're paying attention to it. Encumbrances, if you don't understand them right now, don't worry about it. We're going to go in over those in more detail later. I just wanted to kind of give you a quick and dirty idea of what an encumbrance was. Again, read through your textbooks, look over your notes. Your homework should bring up some questions for you, and anything that you've got, you can just get a hold of me, and I'm happy to go over those with you.